Hello everyone, it is April 5th, it is Tuesday, I'm your host The Cowboy, this is Elliott Wave Cafe and I'm coming to you with another episode of the chart of the day. Today we're going to take a look at XME and we're going to take a look also at waves. These are two interesting issues that I wanted to talk to you about today, and I think they got something interesting to offer. So let's jump and take a look at those. Go ahead and check out also the video from yesterday. I've done a look at Nifty 50, the Indian stock index, and I think it's pretty interesting. You can find value in those even if you don't trade it. I think in terms of kind of counting and looking at the overall structures, I think it's helpful. So check that out along with all my other videos that are into this channel. Go ahead and subscribe and like and tell people about it. I want this to become a pretty strong informative channel when it comes to Elliott Wave and with as many as people possible joining and learning this methodology that I love and I think many others do that are attending these videos, let's say. Right, so without further ado, let's go and take a look at XME. I'm not interested a whole lot in kind of what happened before in here. I mean, you can see three-wave type declines in here. It's not a very trendy market. This is metals and mining ETF. And it's not really, it has, let's say, you're starting from 2004 and you're continuing to trend higher, like you see Apple, Google, like a lot of stocks, right, that have growth potential. This is more of a cyclical nature, and as commodities kind of go in and out of favor, and especially now with the latest news in inflation and, disruptions globally, you could see a lot of people kind of flocking towards this type of instruments. And XME, it's one that clearly benefited as it moved from, let's say, $14 here to almost $65. And I think it's kind of getting long and a little bit tired, and there could be some opportunities here. And I've actually shorted this personally with the members a couple of days ago, and I don't know how many of them did it, but I've initiated a short position. I've explained my reasons why, and it's been doing okay so far. I mean, it's only been a couple of days, but I am targeting, this move to kind of see if I can get it a little bit lower, at least back towards 48, if not, maybe back towards 42, over the next few months, if I'm able to hold it that long. So we'll see. But basically, the wave counts in here, I'm noticing, and you can take from this lows to this high. I mean, it's just a three-wave move so far. And, you can argue you have a pretty good impulse in there. You got a three-wave setback in here, almost back to the origin, more than a 70.6 pullback, and then you got another strong rally here, another impulse, and it's almost equal in wavelength in here. And this is when things start to pique my interest. So I'm watching for C versus A to see kind of what's the relationship there, and I also want to see if I have a decent five-wave advance into these moves. And if you look at XME, basically, let me just kind of get rid of the cross. If you look at XME in here, I mean, it does show you that you have a big, large pattern in here, and being a pattern that is developing after a very strong advance, it makes me think that this has got to be a fourth wave. It cannot be a second, right? Because first of all, it would be very, very short. Second waves are rarely this choppy like a fourth wave is. They're more directional in time, and then it's coming after a very, very strong impulse already. So I'm watching this impulse as being a third wave. I'm watching this as a fourth and a fifth. So I don't even actually have to put labeling in here. I can just kind of visually scan. And I do this all the time. I go through the S&P 500. I go to, S&P 100. I go through, liquid ETFs, things like that, and I just scan them every day, every couple of days, maybe every week. I just go and just go in my charts, and I want to upgrade my PC. And then I just scan them and I just, look for patterns. I look for ABC patterns. I look for five-wave moves. I look for things that look interesting, divergences, things like that. And I discuss this in the room. But it is, and then, every once in a while something piques my attention. I scan, social media and see what people talk about, what they're getting excited. Because Elliott Wave, it's a sentiment tool mostly, right? It's something where you put all the human behavior in a chart, and then you see when they're getting excited, and usually you get these extreme sentiments in a fifth wave type of a move, and and everybody talks about commodities and inflation and things like that, and I think some of these things are getting a little bit too hot, so there could be reasons to look on the other side. But Anyway, I'm not a big short guy. I don't like to short a lot. I mean, my members could tell you I rarely short. So this could be one of those situations that, might be, I might just lick my wounds if this thing kind of continues to push us higher and I find it at about $100, over the next few months. Who knows? But obviously I'll be out way before that. So what I'm looking in here, I'm looking at this fourth wave, and then we should have a second in there. So here is the count. I'm going to put it up. So I'm just looking at this as an ABC. I mean, the C wave obviously won't get confirmed until you're pushing much lower in here. Usually you want it to break below this B wave. But since this is obviously a long-term chart, 2016, almost a 6-year chart here, I'm not expecting these commodities to kind of push back all the way to the B wave low, right? But I'll be able to tell that this is not going to be a trending move as you're pushing higher. I mean, there could be a huge commodity cycle, and this could be a 1, 2, 3, 4, and 5, and maybe that's going to be the move over the next, 10, 15 years. Possibly, right? But for right now, due to the fact that usually I consider this as a cycle ETF, I am just looking at it as a simple ABC. So you can do some measurements in here and go in, and I'll see you're slightly higher than, you're about 127% rally, somewhere near that neighborhood. So you cross that 100% equality, which is not the best thing in the world, but it's not too far out. It's not like I'm over into the 1618 in here. And even then, you could still have a big C wave running up all the way up there. I mean, for example, if you look at this decline, this one, oh no, I think this one was about 100% of this. I got to go back and remeasure it. But usually when things travel towards 161.8, you tend to label those as third waves, right? But you only find that out if you're going to get a fourth and a fifth. You can't just assume that that's a third. So let me just delete this. I'm going to get rid of the C in there. And then what we'll do is we'll take a look inside these moves, and I'm going to go down to a 2-day chart and see kind of how this looks in here. So I'm going to go right there. So I think this is my best interpretation for right now. I know there is a little bit of a difference here between, wave 4 is a little bit larger than this second wave in here. And, I think I'm fine with that. I don't have a problem. I don't think it's a huge issue. Again, just because of the nature of this move in here. And you can go and drive yourself crazy trying to count these moves, but it's clearly a corrective sideways move. And if anything, it's probably a complex WXY or a WXYXZ in here. There is so many ways you can do. Maybe, I don't know, maybe it's even a triangle. You go in an A, B, C, D, and E. Maybe there's a barrier triangle in there. So it's complex. It's messy. It's clearly sideways. So don't waste energy looking into it much. Just kind of scan it and say, fine, I got an impulse, I got a second, I got another impulse, I got a fourth, and I'm getting a fifth wave. Now, you're scanning a little bit lower and you're looking at even smaller time frames. You're looking on a daily chart. And you can start to see, let me get, because I lost my arrow. But you can see in here, I mean, look at this move and look at the RSI down at the bottom right there, right? That's pretty much lining up with this high. And then as I'm climbing higher in here, I'm losing momentum, and you can see that the RSI is not responding. So huge divergence in here. This is kind of what I'm looking for when I look for, sort of a 5-wave tops, or clues that things might start to run out of steam, and there might be, positioning, even if it's shorter term, to kind of take advantage of. Right now, this is pretty dangerous. So if you're not, confident in your Elliott wave abilities just yet, if you're still learning, I'm not suggesting this in any way. I'm suggesting you're waiting and you're trading an impulse rather than trading a top, because what this does, it will make you want to pick tops in markets, and that could be a dangerous game. So I'm noticing things here that are telling me that there could be a sell-off coming in here, and I'm going to be ready to bail out if this market moves higher out of here, right? And now I'm looking at the smaller time frames, and I'm noticing in here, you can look at the wave, let's say 1, 2, 3, 4. That's not good enough for me. 1, 2, 3, 4. 1, 2, 3, 4, 5. So it's possibly, an ending. I don't think it's an ending, but it's maybe a terminating move here in a fifth wave. Maybe I'm going to push a little bit higher, but it is looking, and even if you count, let's say from this low, you go in a 1, 2, 3, 4, and 5, right? For some reason, let's say that this drop belongs to this fourth wave, and it's not a 1, 2 in here, but the rally actually starts from this low, then you can have a 5-wave sequence up. So you're never going to be able to clearly tell exactly how clean it is, but you're getting clues from the market that you're getting tired. The RSI drops in here, you're getting into a pennant looking formation like that, and this tells you that you could be about to roll over. Now, one of the targets for a short positioning in here for me, it would be a move back towards this level right there, right? This would be, let me just kind of get my my price marker. So you'd be about towards 53, right? And that's a, pretty decent drop, I would say, right? Almost a 15% drop, which is no chump change. So if you short, whatever, I don't know, I'm just going to say numbers, if you short $10,000 worth of XME, right, and you're getting a 15% drop, that's $1,500. So, but whatever you're doing, I think there is, this would be kind of the first thing. Now, this will also be like a confirmation for me that this move here, it's starting to smell more like a fifth wave, right? And then if I'm getting something like this, and I'm getting a 5-wave move from this highs, and I'm starting to get, let's say, wave 1 is the first decline, and then I'm getting something like that, right? 1, 2, 3, 4, and 5, right? Let's say over the next, couple of months in here, right? More of an impulsive decline, which I'm pretty sure it's not going to be as clear as I would like it to be, right? It's going to be more messy. Then the next targets to the downside in the XME will be this fourth wave lows, right, towards $40. So now this can happen a couple of ways. You can get an ABC in here, right, and just still target this no matter how you get there. See, there is a saying that markets go to the most obvious place in the least obvious way. So you could get all kind of ways that this could unfold. It could be an impulse, it could be a correction, it could get into a big complex move. So you can get an ABC out of here, right? Then you're going to get an X, and then you're going to get another ABC. And maybe at a larger degree of trend, this is becoming something else, a second wave or a fourth wave. I talk about this all the time. So I really don't care how it moves all the way down here, but I just know that if this is a fifth wave, it's not going to sell off just up to 53.20, right? At a larger degree, it should sell much lower, at least back towards 40. So you can enjoy maybe the first move. This will start to confirm it. And sometimes, and I don't want to give too much away, but sometimes, you might want to wait for this to happen first. If you want to be a little bit safer, and then, you're shorting, let's say, the rally up there, and then look for a decline lower. So maybe I'm a little bit premature. It's one of the things that I kind of jump in when I'm getting excited about some moves in here. But this is basically one of the ways to look at the markets, and then, see if you can generate, a little bit of a positive, let's say, P&L by taking advantage of a strong move out of a fourth wave formation that it's going to be a terminal move. So, the risk here is that this becomes a fifth wave, an extended fifth wave somehow, and this is, let's say, a wave 1, we're running tired, I'm doing a short, let's say, 3-wave decline, and this thing rips higher. So that's why even if I'm short, I'm willing to kind of take profits a little bit, and then we'll see if if the market doesn't cooperate, then you kind of have to get out, and if it does, then you just kind of let it continue to decline. So anyway, I talk about this in the room all the time, and we're this is kind of one of the things that I teach the members into my room, and people that ask me questions about how you trade things and stuff like that in Bitcoin and other stuff. How I'm approaching shorts, how I'm approaching longs, which legs you're trading, where you get confident, and where you kind of have to wait and look for confirmation. So this is XME. Wow, 15 minutes in the video. Let's jump over and take a look at this one as well, at waves. So now this one, it's interesting because I think it's got more data. It's going back here to January 2016 to these lows, and I don't have this data in Motive Wave, but I pulled it off Crypto Compare, and I think there was an impulse, a big impulse out of there, and then there was a big correction. So, I don't know, this is a 1-2 possibly, and now we're kind of beginning the next sequence up, or this is just an ABC and you're about to crash lower. I'm not sure, but here is kind of what I have. So, I'm looking at this. So there you go. So 1-2, maybe we're in a larger cycle, third wave in here, right? I've just placed just a channel at the normal degree, just kind of continuing to climb, and then you've had another big rally. Now this big rally in here obviously looks impulsive, so I kind of counted it like a 1, 2, 3, 4, and 5. You have, so that's a 1, 2, 3, 4, 5 in there. Let me get rid of this, and then you got a deep second wave pullback that came back into the 618. So beautiful 618 retracement for a second wave, which usually happens. Then you go up in this larger third wave in a leading diagonal in a wave 1, down in 2, up in 3, down in 4, and then up in 5, completes third. Then you go down in fourth wave, and then you push higher here in a fifth, in a terminal fifth wave. So this move obviously finished up there at about 41.86, I think, last year, just when all the other alts kind of topped out. You're looking at that at around May 2021. And then let me make this a little bit bigger. So and then you just kind of started to sell off. And I've talked to the guys here, to the guys in the room, when we were climbing out of these levels. I said, listen, I think this looks like a very nice three-wave correction. If that is the case, I think this thing could accelerate higher. I did not trade this. I don't own waves, but it just seemed like such a nice, juicy pattern. I wish I would have, but sometimes you don't catch it. So anyway, it is, it was a pattern that actually resumed to the upside. Many other alts have a similar structure that have not made new highs, so I'm definitely watching those. But this was a nice three-wave setback, and it did not come all the way to the fourth wave. Usually you come back all the way back here, let's say, right, and it just kind of finished shy of that. And then it made new highs. So now you're asking, well, what is this? Is this another wave 1, another wave 2? If that's the case, I mean, you're probably going to rally, aggressively for a larger third wave towards 600 in waves. I'm not sure if that's even possible. But listen, so far you've gotten a move out of here. Now, if I'm wrong, and this was a fourth wave, I just don't know what to match it with. I mean, do I have to match it with the second and just say that's a 1, that's a 2, this whole thing is a 3, you get a 4 and a 5? I mean, that would be my backup plan in case. And then the structure in here gets very messy, right? Because you have to go 1, 2, 3, 4, and then 1, 2, 3, 4, and 5. It's very awkward to kind of count the internal of that move. So I really prefer it as a second rather than a fourth. But if you're breaking below these levels in here, then it's likely this was a fourth wave, and you're going to push, and then you're going to push higher. I'm sorry, that this was a fourth wave and this was a fifth, and then you're going to come back here in some kind of a three-wave decline, and you're going to break to the downside. Now, if it is a second wave, this is kind of how I would look at it. Let's say that that's a 1. I'm just trying to kind of go through the thought process of how, let's say, a second wave can still unfold in here. So you sold off in 3 waves, and this is a 3-wave decline. Then you got to have a 3-wave rally for a flat formation, because that's one way to kind of continue to have a second wave like this in here if you're running a flat, right? So you go in an A, B, and then down in C, but that's an impulse, so you can't have that. You got to do A, B, and then up in C in 3 waves to get a flat formation. So I don't think that's the case. So my mind goes, here that this is a wave, another wave 1, and then this is another 2. So that's bullish, that's down bullish, and then you're doing an impulse in here in a 1, 2, and now the market kind of tells you, well, you're going to get a second, and then 3, 4, and 5, and you push higher. So I don't know what's going on. I don't know what these guys do, why we rallied so much, why are we selling off right now, what's going to happen in the future. But if you were, let's say, unable to take advantage of this rally based after the three-wave correction, what are we doing now? So how do we put this in perspective? How does this counting help us? So let me go back to a 2-day chart, and I'm going to put this in. So here is, let's say, an ABC correction, and then from those lows here, you're getting up in an impulse, and you're coming down in a decline in here. So you have possibly just a WXY in here for the second wave, and then you're rallying higher. Right, and this is a pretty clean move, and I talked about this also in the room. I said, you're breaking higher here. It could be, this looks like it's about to finish. You actually rallied to 423%, which is a super extended third wave, which means that likely the fifth wave will be sort of short if it's happening. So you might even end up here with a truncated fifth, after this fourth wave finishes. And again, short of counting this as an ABC, which I wouldn't like to do, right, of some kind of a B wave flat formation, which is crazy, but you're in crypto land. I mean, you got to expect everything and anything, but I still want to be cognizant of the rules of the Elliott wave. So this, to me, it's clearly, as much as is possible, a third wave advance. So if that's a third, then I got to get a fourth and another fifth. So what I've done is I placed some scenarios in here where I'm looking at these moves, and let me see if I have anything saved up in terms of counting. But the only thing I have is basically a wave A. Let's say that this is the decline, and then I'm looking for a B wave rally and then another C wave. So I don't know how much lower this A wave will sell off, but I can tell you that it looks like it's towards the end of it rather than the beginning. You've had a pretty sharp drop here in that a decline in there, right? I mean, this thing sold off for about 53%. I mean, it made 500% or whatever, but it came back. So, and you're coming back to the area where you kind of started the rally from it. And this kind of shows you exactly what I showed you before in XME, right? That spike higher, from a fourth wave formation, which was here. And then, once you finish the 5-wave move, the sell-off comes back to that area. So you can use that as a target. And then here you are in a pretty strong impulse, let's say maybe leading in a 1, 2, 3, 4, and 5. So you could be down, or you might have a little bit more decline, but I think you're obviously oversold. Maybe go back to some smaller time frames, but I think there's going to be some kind of a rally happening next in this B wave. And you kind of have to scan for that and allow this to go anywhere between 38 to 60%. And then that would be, let's say, the next chance to possibly short waves, for a C wave decline. And then, this fourth wave, I keep repeating, this can take shape of several forms. It could be an ABC zigzag. It could be a big triangle in here. It could be a big flat, because you're just basically starting it. So you got a second wave in here. Let's do some time analysis of 4v2. So let me do time 4v2 in here. So you're looking at, and this is what's cool about Motivate software, that it gives you all this stuff. And hey, if you guys want to try, there's a link below this video where I get a little bit of a percentage if you guys subscribe by using my link to Motivate. So if you think about it, just don't forget to use my my link on there, because it's helps out a little bit. So 1, 2, 3. This is an A, B, C. So in time, I mean, you would still have to go to just reach equality with this wave 2 back to April 26th. So towards the end of this month, which I think it's early, and this usually fourth wave is a little bit bigger. So maybe May 13, maybe middle of May, by the time this whole mess is over, and then you're rallying again. So I wouldn't get too excited about, buying waves here. I mean, you can buy it for a B wave, but it's dangerous. For me, I want to wait for a B wave rally and then short a C wave. That's kind of how I would look at it. That's what I have. And then listen, from here, then you can go up in a fifth wave, and I know it's still very, very early. And then it's going to be a 1, 2, 3, 4, 5, and then you will get another ABC for, let's say, if this becomes a second wave at that larger degree that I just showed you. right? If that's a 1, 2, then you get another 1, 2 out of here. And here is the, you know, the 38.2% where this fourth wave kind of should end. You really don't want that fourth wave to get much deeper than that on the pullbacks, and it seems that that's kind of where we sold off into, at least in this initial decline towards 29.16. So that's 38%. I'm talking about this fourth wave, and then so wave 1, and then you're probably going to get an ABC in here, ABC like that, and then another rally higher. So there's plenty of time. I mean, this move was already made. Forget about it. And now just kind of wait and see if you can play the rest of the game by looking at some of these counts. So, I mean, long video here, 25 minutes. I hope this was helpful. I don't know if I was all over the place or not, but guys, don't forget to subscribe and like, please, and you know, leave some comments. Let me know what you think. Also, visit me in the Pro Room, take a trial, come visit us for a month. You'll learn plenty being in there every single day through my videos, through my updates, through my webinars every single Thursday, live streams, and you know, trade setups, positioning, stuff like that. And I guarantee you'll become a better trader for it. Probably these videos help you a lot as well. But you know, if you want to try us out, there's a link below this video as well. So thank you for watching, and I'll see you guys a bit later. Bye bye.